Hello everyone, it's Daniel Martin. Another article. This one is about trading psychology, less screen time, more profit. I wish somebody told me this before when I was young and not wasting thousands of hours in front of the screen. So we have two hosts. We got Maria and Peter. They will be discuss my own article, and myself I will add in some annotations. Pretty much I will add it something if it's needed as we go through the article because I will thinking about my own thinking. So let's go into the article now.
If you got into trading, I think I know why. You were probably sold on, the promise of freedom.
Mm-hmm.
Freedom from the cubicle, freedom from the clocking in and out, just that whole dream of working on your own terms.
Oh yeah, that dream is the biggest hook, isn't it? The idea you can separate your time from how much you earn.
Totally.
You picture yourself trading maybe 2 hours in the morning and then boom, the rest of the day's yours. Travel, hobbies, just relaxing.
But the reality, and this is what we're diving into today, based on experiences and research from successful traders, is that for way too many people, that freedom, it turns into a new kind of servitude, endless screen time.
Yeah.
Suddenly you find yourself just glued to the charts, chained to the ticker tape, feeling maybe even more trapped than you did in your old 9 to 5.
And look, this isn't just about wasting time, which is bad enough. This is the really crucial finding from the sources we looked at. That all that extra screen time, it isn't just inefficient. It is, believe it or not, actively hurting your profitability.
Actively hurting it. Wow.
Yeah. So our mission today really is to unpack this contradiction and maybe find those actionable strategies that the really good traders use to prioritize, effective execution and mental balance over just constant debilitating observation.
Okay, let's unpack that then. Why does being constantly present, like always glued to the charts, actually end up sabotaging your performance? It feels so counterintuitive. Shouldn't more observation mean, well, more knowledge?
It sounds logical, yeah. But the psychological fallout can be pretty devastating. The research we reviewed, it highlights this phenomenon they call the perfection trap.
The perfection trap, okay.
Traders just get sucked into trying to anticipate or, perfect every single entry.
Okay, before we continue, I want to add something about this logical way of thinking. And this is one of the things that I'm not going to explain who I am, but is that I always think in the opposite of the logic, and that's why I become profitable on the long run and still ongoing. So what it means is that, let me explain to you this how this works. I made the mistake that all of you have made to be in front of the screen by 100, and I will say 1,000 of hours, yeah. But I did found that, yes, it's true that you can see patterns. You can see, it's like you got that kind of feeling that you know what's going to happen in the market because you thinking, I know because I have seen it. I know something, I got that feeling that's going to go long, it's going to go short. I got that, it's something that you saw so many times that you're aware of already or something. It's a pattern, it's something there that telling you that you need to be out or you need to be in. This is what happened, and this is true. Watching too many hours of the screen is correct, but my question was for me, is that really true? And when I realized that when actually I was happening these moments based on my back testing and journaling and all that, I realized that happened when I was focused in one instrument at one time specific. So when I was doing, let's say 7 or 5 to 7 p.m. or 6 to 8 in the morning. So when I was doing exactly the same hours and the same instrument, it was the one that was more valuable than the other 8 to 10 hours in a day. That was actually random places, random location, distraction. That was not the same, and that was the quality ones. So it's not about the quantity, it's about the quality. A perfect 1 hour with the same instrument, with the same time frame is more powerful than 100 hours, and that's where you will see much more than anybody else. So guys, let's continue with the article.
An exit. They're constantly tweaking a strategy that might have already been proven to work just fine.
Right. And that desire for perfection must be exhausting and maybe paralyzing.
Exactly. That exhaustion, it pulls you away from the one thing that actually makes you profitable in the first place. Executing your proven plan with, machine-like discipline.
Okay.
The more time you spend just watching, the more your mind desperately searches for signals, even when there's nothing really there. Just noise.
So what specific mistakes, psychologically speaking, start creeping in when a trader is just staring at the screen too much, overexposed?
Well, the mistakes usually fall into, I'd say, 3 big categories. And they're all driven by just sheer mental fatigue. First, you start seeing trades that are basically pure noise. Your brain's wired to find patterns, right? And after 8 hours of staring, it'll just invent signals to give itself something to do, something to latch onto.
Seeing ghosts on the chart happens to the best of us.
Precisely. Second, that perpetual observation, it starts making you doubt your original plan, the one you actually researched and tested.
Right.
You see some tiny little fluctuation and suddenly you're thinking, oh, maybe my stop is too tight, or maybe I should have entered 5 pips lower. And this quickly leads to hesitation, or worse, jumping in and out too much, over trading.
Okay, yeah.
And the third one, which might be the most insidious, forcing trades, simply out of boredom or like this emotional neediness that builds up after hours of just waiting.
Oof. Forcing to trade because they're bored, that's a tough admission, but I bet every experienced trader listening right now has done that at some point.
Oh, absolutely.
Well, let me specifically clarify about boredom or being bored. Bored is a good science. Means you have found your strategy. Being bored is a very, very good reasoning to start to believe that you are a profitable trader. If you become bored about your own strategy, that is very good news. Now, don't get into the trap of being wasting your time doing something that doesn't make sense because you got excitement. So don't go into the trap of being, let's do this new trade. Maybe this will work better because you've been glued to the screen so many hours that you don't even know what you see or not. Because there is no perfect trade. All the patterns that you see, all the instructions that you see, all of them, they have a different from each other. Even a mechanical traders, they found that there is not the same trades whatsoever. Even the exit is different or the stop loss is different. They cannot find something that's exactly the same. It's not working. It doesn't work in the long run. So you're looking for a perfection that is not possible because the market is not a perfect. It will never be. Now, if there is too many variables, it's impossible. And being bored is actually a very good science, but you need to be careful when you spend too many hours in the screen. So be aware of that. Let's continue with the article.
And that transition, it brings us right to this idea, this illusion of control. The market, it doesn't reward your effort, right? It doesn't care how many hours you stare at it. It rewards patience and precise execution.
Yeah.
Believing that staring harder or longer will somehow, compel the market to do what you want, that's pure illusion.
It really is. I mean, the market moves on its own schedule, period. You cannot influence it by staring harder. It doesn't care. But when you're hypervigilant, constantly watching every tiny little up and down tick, you change the internal dynamics, your own internal state.
Okay, but this is where I want to push back a little bit, because this advice, it runs smack into the biggest fear most traders have. FOMO, fear of missing out.
Sure.
If the market's moving fast, maybe it's volatile, and I'm supposed to just set my alerts and walk away. How do I stop myself from missing that one big move, the one that could make my day or week?
That's the core tension, isn't it? Look, the market will always produce moves. Big ones, small ones, sudden ones. Always. But if you're constantly watching the psychological toll, the cost of reacting to all those small, irrelevant moves, it just stacks up. It erodes your objectivity fast.
Okay.
Staring at the screen doesn't actually give you any more control over that big move when it happens. What it does do...
Okay, I want to add something else in here that is important. That just come up into my head now. Before we continue with the article, it's just very simple that thinking about this for 1 second, yeah? How often your feelings changes from happy to sad to emotions, all type of emotions you have. You're probably not even aware of the amount of changes you have in minutes. In 10 minutes, you change constantly. All the emotions constantly changes from very high emotional to maybe, you can be sad, but you can be many variations of sadness to go to depressed, or you can be happy, many different options as well. So I can give you hundreds of examples of this, but the key is that feelings changes constantly. Let's say that on average you change your feelings. You can research on that. Let's say 10 times in an hour, which is not true. It's more. It's much more. So let's say 10 times. So if you are glued to the screen, how many times? How many hours? 10 hours. You go 110. 100 psychology different ways of looking the screen. So if you psychologically, your feelings, they are different when you actually look in the screen, you will see different things. That's it. It's that simple. You go into tired, you're gonna be different. You're happy, you're excited, you're different. You see, you are angry, you see different. So you constantly changes. That's one of the most important things, to be paused and be on this, what we call it, being in the zone, being into into the stage of a trader. It doesn't matter which feeling is that. You need to be always in the same stage of being controlled that feeling. It's not about to not have feelings, it's about to have the same one and be prepared to have the same one every time you take the same trade. Or, well, the same trade, any trades. Every time you take a trade, same feeling. Simple, no? So for that, you need to pause. You need to control. More hours you put in front of the screen, many hundred feelings you're going to have, as has been explained already. So let's continue with the article.
It was amplify your emotions during the, 99 smaller, totally irrelevant movements that happen before or after it.
So constant observation is basically an expressway to emotional trading.
Absolutely. Those minor bumps, they start to feel really significant, urgent. And that leads directly to impulsive decisions. You end up burning through capital, burning through mental energy, because you convinced yourself that the hourly noise was actually the critical signal. The research actually poses a really powerful question directly to you, the listener. When was the last time you genuinely made a better trading decision? Because you spent an extra, say, 5 hours just watching the market tick by.
Yeah, if we're being really honest with ourselves, those 5 hours probably just led to second guessing. Maybe canceling a perfectly good order out of anxiety, or worse, chasing some breakout that had already happened 5 minutes ago.
Exactly. Which brings us right to shattering this productivity myth. We're culturally wired, especially in business, to believe that working harder means succeeding more. More hours equals better results.
Right, the hustle culture.
But in trading, it's often the opposite. The sources show that the most consistently profitable individuals often trade less, not more. They prioritize quality entries, patience, discipline, over just logging screen time.
That's a huge mental shift, the moment you realize that overexposure is actually the enemy, not the solution. Yeah, everything changes.
It really does. Because overexposure leads directly to mental fatigue. We talked about that. Emotional impulsivity. Terrible decision making. If trading is fundamentally a high-performance mental game, and let's be clear, it absolutely is, then rest and recovery are just as vital to your bottom line, to your profitability, as your actual trading strategy.
It's that athlete analogy you hear sometimes, right? An elite marathon runner doesn't train 24/7. That would be insane.
Of course not.
They focus on quality training sessions, and then they prioritize recovery just as much. They know that's what allows the body, or in our case, the mind, to operate at peak capacity when it matters.
Exactly right. You just cannot maintain the laser focus you need for disciplined execution if you're constantly trying to mentally sprint across every single chart pattern all day long. You need defined periods of rest, recovery to make sure you come back to the screen, sharp objective, and calm.
Okay, so if the problem is this sort of chart addiction, and the solution isn't just work less, but more like work smarter, how do we practically break that cycle? The sources seem to recommend a pretty foundational shift. Focus less on the charts themselves and more on, well, self-improvement.
Yeah, we need to start with the mental tools first. Journaling, for example, but not just recording your trades like a ledger. In this context, journaling is more like behavioral analysis.
Okay.
The purpose is to create some detachment. Instead of focusing only on where the price moved, you focus on why you felt compelled to act, or maybe why you hesitated and didn't act.
So what specifically should a trader be journaling that helps break this screen addiction?
Well, they need to objectively capture their emotional state, like before the trade, during, after. Were you anxious? Were you bored? Were you feeling vengeful after that last loss?
Okay.
By reviewing these behavioral patterns later, away from the heat of the live market, the pressure, that's when you start making real psychological improvements. Stuff the charts alone could never teach you.
And the other side of that mental toolkit seems to be mindfulness or meditation. I mean, trading demands a calm, focused mind, right? And staring at charts for 12 hours.
Okay, let me add something else in here to make sure it's clear. It's important, as I said, to be aware of your psychologically stage before you start trading. As I mentioned before, I would say before, just make a note, very simple, during and after. And I know that is some of you trading 20, 30 times, 100 times a day. It has to be for every single trade. It will be difficult for many of you. Some of them will be easier because you trade once a week, once a month, or you're trading 3 times a day. But some of you will train 20 times a day. So I know it's difficult. If you cannot do that many, do one at least. And that is especially the first one and the last one. Maybe one in the middle. What I try to say before, during, and after, just ask the question, how am I feeling now? That's simple. What is your feelings right at that moment? That's it. Make the note, continue trading. Let's say euro dollar, you're gonna trade it now. Yes, okay, 1 second. Before you going into the screen, switch on the screen. How do you feel now? Then you go into the screen, you can actually ask the question before you take the trade, why you going, or how do you feel now before you take the trade? Now, when you're trading, you can do as well that, or on the end of the trading too. So in total, it could be 4 times that you ask this question. You don't need to ask for all of them, but it's important that you ask for the first one before the day, before starting the day, and the last one, because those they are ones that provide the most extreme situation where you are fresh and when you are super tired. Yes, or when you actually have many losses and so on. But let's start from basics and have at least some of them. All right, so let's continue with the article.
Practically guarantees you'll have an anxious, overstimulated one.
Absolutely. Taking even just 5 or 10 minutes a day for some structured mindfulness or even just deep breathing exercises, it helps reset your nervous system. It builds that mental muscle you need to recognize that unhealthy impulsive state when it starts creeping in during a trading session.
So you can pause instead of panic.
Exactly. Pause instead of react impulsively.
Okay, so once we have those mental tools practiced, we need the structural ones, the practical boundaries, the rules that enforce discipline. The source material was really clear on setting some hard lines between trading life and, well, actual life.
Yeah, it has to start with defining strict trading hours and actually treating them like a job. If your strategy works best during, say, the first 3 hours the market is open, then you trade those 3 hours diligently, and then you step away. Seriously, stop.
Stop, just turn it off.
Yep, the market will still be there tomorrow, I promise.
But that fear, it's always lurking, isn't it? If I step away, I might miss a great setup. How do we counter that specific fear structurally?
You have to trust the plan, and you use the tools we have now. Instead of being glued to the screen waiting for price X to hit, you set an alert for price X.
Okay.
Or even better, if your plan clearly says enter trade at X, place a pending order and then walk away. You literally build a system that removes the need for that minute-by-minute monitoring, which is, by definition, letting the market do its thing.
That's a huge mental release, just thinking about it. It forces you to rely on your process, your system, rather than just constant vigilance.
And that boundary, it absolutely must extend to the rest of your day too. You need to implement rules like no checking charts on your phone while you're eating dinner, or out for a run, or trying to relax with your family.
Guilty as charged sometimes.
We all are. But if you're constantly refreshing the ticker while you're supposed to be recharging your batteries, you haven't actually left the cage. You're still inside.
And that rejuvenation, that recharging is so critical. I mean, the original reason most people started trading was for freedom, remember? You need to actually use that freedom, pursue other interests, travel, exercise, hobbies, whatever it is. The sources really emphasize that coming back mentally refreshed after genuinely engaging with life, that's exponentially more valuable than squeezing in 1 extra hour of just passively staring at a chart.
Yeah, and this all kind of rolls up into the absolute necessity of prioritizing your mental and physical well-being, sleep, proper nutrition, exercise. These aren't luxuries for a trader. They are core requirements for peak mental performance. Trading is mentally taxing. You can't achieve.
So I want to actually to give you some details about my own personal workouts and when I make more money, or when I make the most, or when I make more periods of successful. It's those actually periods of time that I have in my routine. Sleep 8 hours, yes or yes, 100%. So what is the meaning of that 8 hours? It means imagine that I wake up, or even I go a watch of me to calculate how many hours I sleep. Imagine that I slept 6 hours and a half. So I need to find during the day to sleep the rest of the time to reach 8 hours, yes or yes. Why? Because it's no problem to sleep one day 6 hours or 7 hours. It's the problem is the accumulation of many days not sleeping well and not recover those hours. So every day 8 hours, no matter what, is a rule for me. You can actually have, maybe you need, some people say I need 6 hours, and I tell you, I haven't seen anybody that needs 6 hours. You can get used to it to sleep 6 hours like me for many years, and many years that was actually suffering of trading. So if you do well for sleeping 8 hours, 9 hours, and especially when you get older, you need more. When you're younger, you can maybe actually can hold it a bit more to be in 6 hours, yeah. But then the fatigue coming later, and you need more and more. But that's it, 8 hours. Just do that. Just take your time. Don't use the screen before you go into bed. Forget about the charts. Forget about the YouTube or forget about the TikTok or whatever you use it. Don't screen 1 hour before, then 8 hours of sleep, then wake up and no screen either. Not even probably get those alarms. There is no phone. Those alarms that you can use it without even actually have a bit. Those very old-fashioned alarms. Get it on. Just wake up, relax. Even for me, I don't have an alarm. I wake up naturally. So because I just done so many times, so many years, the same wake up time, that I just wake up naturally at 6. Go to bed at 9 and wake up at 6. So 6:30, 6:15, always around there. So very important to have this routine. Why am I doing go for a walk? Why do I go a cold showers? Why am I doing to have minimum to drink 3 liters of water a day? All this is trading is like a sports. You need to be always consistency in your control of your body and your mind. If you not take seriously that's why many people they are not successful in trading, because they don't take this seriously. So all these tips is not because I want you to say, you must do all this and that. No, this is gonna make you to be your mind to be more in control. Just have a look those days that you don't actually sleep well. Don't you eat more? Don't you feel more out of control? Don't you craving more chocolate and more biscuits and more things because your body need it? So you see, you start go by feelings. So because you cannot be control yourself, because you need something, because your feelings is coming pop up, or you get more angry. Anybody talking to you, don't talk to me. You're there. You see, all these things happen because you don't sleep properly. So focus into those patterns that make you profitable. Is control your body and your mind. Let's continue with the article.
Achieve objectivity if your brain is running on fumes and caffeine.
Right. So to sort of summarize the shift in how you allocate your time, move time away from just staring at live, real-time price action, and dedicate that saved time to 2 key things: self-improvement, like journaling and mindfulness, and objective review of past performance.
Exactly. Spend quality time objectively reviewing your past trades. Analyze those journal entries. Learn from your actual mistakes and successes. Real growth doesn't come from passively observing a live chart flicker. It comes from actively reflecting on your previous behavior and how well you executed your strategy.
This has been a really critical deep dive, I think, into the true cost of
Okay, I want to add something else in here. So my own experience, do you think actually I do review all my trades every week, every day? No, I don't do that. No, I'm not doing it. It's impossible. Jesus is consistent. There's another routine that you need to add into your daily disciplines. So yes, no, but I have minimum to do once every 10 days, every 2 days. If I don't do on Friday, minimum is once a week. So if I'm not, the latest have to be Monday. Yes or yes. So I cannot actually skip that. It's a priority that I go 100 alarm if it's needed. So just make one review. You don't need to review your 10, 20, 30 trades in a week. Just review one trade. Review that. And the review is important that you make annotations and you review that annotations one more time. So how do I do it myself? I review one trade a week. Then I review my review on the end of maybe just sometimes 2 trades a week. Of my 10, 20 trades I go a week. Then those 2 is on Friday. Every end of the month and beginnings of the month, between end of the month and beginning of the month, depends what day is of the week, I will review the whole 4 reviews. And constantly that on August, I review my year before. And in December, well, more in January, I review the whole previous period from September to December. So you see, you must spend time away from the screen and more into your thinking, into the analysis, into that wasting of time of thinking about your own thinking on trading. So very important. Let's continue with the article.
Overexposure in trading. The core takeaway, the synthesis, seems pretty clear. Success is ultimately measured by the quality of your decisions, not the sheer quantity of screen time you log.
True. Sustainable success. It means building a life where you actually trust your process and you have the mental capacity, the energy to execute it consistently. It really means balancing your work, your trading with your life. Understanding that your energy, your focus, your peace of mind. Those are the most limited, most valuable resources you trade with every day.
So, if you've realized today, listening to this, that maybe you've just traded one grind for another, one cage for a different one, we want to leave you with that powerful question that really motivated this entire deep dive. Have I actually achieved the freedom I was seeking, or have I just built myself a new, maybe even more demanding
Alright guys, this is the end of the article. I hope you enjoy it. It's an amazing experience for me to review my own thinking and to add extra annotations into the article. So just remember, those nuggets that I'm giving you there, they are very important. Please do not take it as that's it, a joke, nothing important for me. It's not, this is not for me. I don't want to do it. This is too much work. No man, you need to actually to focus into that. Even review is a work to do. I know, I understand that, but you need to find these moments, those moments of take care of yourself mentally, physically, and review your journaling correctly. Even your back testing, you need to have the right mindset to do back testing. People don't talk about that, but if you're angry or you're tired or you're actually distracted and you do your back testing, is the same mistake. It's like a trading. So don't make the same mistakes that I have made myself in the past. I just try to advise you to do better, to be a better trader. So that's it. I hope you enjoyed this article. I will do more like this. So guys, see you in the next one. Bye now.